Ladies and gentlemen, I got your watch list for August 6, 2019, but today, August 5th, 2019, was a historical one for the books. The Dow dropped as much as 950 points. This wasn't the worst day in stock market history, but it has officially gone up there in the ranks, and sadly, we are not unused to this considering what we've seen from 2018 since the beginning of the trade war till now. But now where it gets interesting, if you throw on extended hours, it's down. If you look at the futures, we are down. We've already below 280. Tomorrow is going to be a gap down of some sort, and I want to talk about what is going to happen. We're briefly going to explain what happened here. We put this in the watch list yesterday, so make sure you guys are subscribed. We're posting these every single night, recapping even the plays that we made. But even then, it was actually nuts. We made that video yesterday talking about the one thing that could make the stock market go down, and it happened literally 10 minutes after I posted it. The Chinese currency weakened, and it hit that crucial set $1 equals 71. And there is a bunch of other factors, and I even want to go over it. There was even news that came out after hours. We're going to go over those plays too. Where is it? That we need to talk about, and it's kind of insane to think about, but this happened, and it has implications, and it just got a lot worse with those futures and everything being down. So you already saw that. I have the keys for tomorrow for you. We're going to go over the plays and what to watch tomorrow coming into this, and even just how to handle this volatility. But I'm just going to get straight into this. You guys know what you need to do. Drop your thumbs up on the video. Make sure you are there pre-market. We are streaming live. You could watch every single movement of this and every single trade. YouTube.com/the stock market. It's pinned in the comments and also the first link in the description. But you need to do the most important thing. Post your watch list below. But let's get to it. I already told you that is why the market dropped. It reacted in a way where not only did China weaken the currency, soybean futures went up. They got halted because China directed mainland buyers not to buy soybeans anymore. Even though China didn't give an official response, they don't have a president tweeting out. This was a very clear signal of escalation, and the fashion at which it happened today is what makes it so insane. Global markets sold off, bonds even hit a low, and even right now in after hours, bonds are at a brand new low that we have not seen. Any of the videos I've talked about bringing up bonds, the bond rates are now lower, hence that TLT. But even putting this all into perspective, it's crazy. Even the news we're seeing after hours, and right after hours, the Treasury labeled China a currency manipulator, and this is the first time in 20 years. And now this is going to have global implications as well as, as far as how this is going to have other countries reacting to this. If now there's going to be pressure coming from other countries in the IMF, but it also now allows China, the United States and the IMF to intervene with markets, which again, this is where things get a little bit messy here. And again, this is a step up too. This is the first time they've done it. This was a big thing that we were looking for. If you don't forget, like the Mar-a-Lago meeting, China was waiting for this. This is really a big slap in the face to them. Honestly, probably one of the worst escalations, again, on top of everything. And now we have something to look for coming into tomorrow morning. Oh, and we are going to stream tonight. So make sure you guys are subscribed. It's in the description. But we're going to be watching for something tonight. But now what China does from here is interesting. But now China doesn't have to engage in dialogue. It's what happens to the currency. And now the judgment that they came to today was because they labeled them a manipulator simply because China didn't use their foreign exchange reserve to stop the devaluation when they normally have in the past. So it's literally, they literally just let the currency float in how it normally should be. But again, they normally would keep it under control. So if the currency started to weaken, what the government would do in the past, and this is how they make sure it doesn't get crazy, or if they're trying to show Trump that they're playing nicely, if the currency weakens, what they would do is they would use their foreign exchange reserves, their dollars, and then they would buy up the Chinese yuan and sell the US dollar. So by adding supply of dollars, it would drop the dollar currency. By buying up the supply of the Chinese yuan, it would make it stronger, offsetting that weakening that occurred. But now they're not. And now this is either because they want it to go up, or now this is the next worry. This is where things could really get bad. China's not really in a position, and this is what they even call supporting the currency. If the Bank of China or the PBOC POC, which is like their Fed and just the government in general, if they choose not to support the currency from where it's at and they just continue to let the currency just keep weakening, that has bad effects, again, and what it could imply. And this could also offset the tariffs, but mainly if they tried to step in and they burn too much money, then they could burn through their reserves very quickly if this starts to become a bank run, or if there's a flight of capital, not necessarily a bank run. But now we already saw in the past few weeks a few China banks failing. As the yuan weakens, this makes their debts in dollars, and in general, if people want to start pulling out and it has that capital flight, this could be really, really bad for China. And that's where it's kind of like Trump's strong arming. So I know we're getting deep into this, but hopefully I want you guys to understand a little bit why this was such a big deal. And again, we talked about in the watch list last night, why if it did go past 7, it would be bad. But now seeing how it occurred at 7, how they just literally let the currency float, this has huge implications. So that being said, I'll tell you what we're looking for tomorrow here, but the key to understand now and the key for tomorrow, volatility is back. The range is big. We're getting a bigger range. The risk is big. The insurance premiums are expensive. The strategy is still small. Again, I sold out of a lot of puts. I still kept a lot of the TLTs, and again, that's how I've been balancing it. And I'm going to show you guys tomorrow. Even we bought an Apple call. I'm anticipating some level of bounce, and I got a spread on Amazon. I want you guys to see, if you don't get time on any of these bounce plays, it's really about timing. This extra 1%, watch it kill those contracts, and how it makes that a lot more difficult to play the bounce. So it's going to be hard. But again, even now, usually when we see any currency float, just like China, pretty much that's what they did. Even though they weakened it, they theoretically just let their currency float against the open market, which is why it weakened and why it's weakening so drastically. But when we see that, usually in 2 weeks, you see some big negative event in the markets, or you see some sort of reaction, because now other currencies globally have to react, and they usually don't do it unless you let your currency float either as a reaction to Donald Trump, or because it wouldn't make financial sense for your open bank to spend your reserves to defend it. So if they're anticipating more volatility, this could explain why they didn't want to spend billions or trillions of dollars today trying to defend it. They could be expecting more pain, but now keyword is 2 weeks. And again, that's just a rough estimate. Sometimes it happens shorter or later, but this is the volatility. We're going to see ups and downs, and that's why I'm saying with the TLTs, everything, don't think actions like this. The first time in 25 years, the yuan is at a historic low. It is not just going to have a few days effect and that's it. It's going to go all over the place. If you guys were there for October, December, even Thanksgiving, it's going to be a wild ride. So I hope you guys are ready. So again, by going small, I did go a little bit big on my Amazon. I did a spread there today. You guys could watch that video we made. I bought an 1840 call, sold at 1850. I spent 245. That's a big one, I know. So that one was still big, and this is what I'm saying. Even if you want to play the bounce like this, $22, that's going to be fine, because if you do catch the bounce, you see what these small amounts could do. But now, even on the put side, if you guys want to play puts, the premiums are expensive here, but it doesn't mean you can't play. But just don't tip this scale. If you're already holding puts, you don't want to overdo it, and you could totally ruin your cost basis. You have to understand this. If you buy a bunch of TLTs at 4 cents, they're at $2 now, and then you go buy 5 or 10 more at $2. You initially spent $20 at 4 cents for 5 of them, then you go buy 5 for $200 a pop and spend $1,000. Just because you got those other ones cheaper and you have the profits, your cost basis you're averaging up if you think about it. So again, if you want to play it, it's kind of just like we did. We did play a McDonald's today. We grabbed those. That was just the first play we made off the morning, and this is what I wanted to take advantage of. I got it within 7 minutes, and it was expensive, but I said, okay, I'll still go small, and it was a weekly, and that's the thing. The weeklies will be profitable and risky, and even on the bounce plays, if you're trying to play the bounce plays, I would get more time. If you're trying to play, the market starts selling off, shorter term weeklies, and you got to kind of be quick. But again, always just try to get that middle ground. As we've always been seeing, if we added an extra week, it's benefited us greatly, especially with a lot of the puts we've even made so far. And even any of the puts I've had in September that went out to September, but I bought months ago and I was down on, I'm actually up on them now. So again, the puts are expensive, and I even turned some puts that came out the grave, I turned them into credit spreads, even though I would benefit. It's pretty much, it's a crazy type of credit spread to think about it. Because I made it a credit spread, even though it should have normally been a debit spread, because of how expensive these are getting. So you guys could play, but you got to be small, and you have to understand you don't need to go big. So I even think, looking back at that was my first mistake already today was going too big on the bounce because I really wanted Amazon. I should have, I could, if I did get it on the put side, that would have been better, but they're still expensive even on the spread. So that was even my error there. And again, I wanted to insist on getting time on it, but that, that at least gives me a better chance than I did if I did the weekly on this spread. It would really get killed, but that one's going to go down a lot tomorrow. But hopefully you guys are getting the concept here, and recognize your total balance. That's even something we talked about today. If you have puts, see how much money you have in cash. So if you're up on any puts, even, or any position in general, so it says 16 or whatever this account's at, 1674. When I go here, I have 851 in cash. That means there's $800 in plays that I have to watch out for. So really, I'm viewing my real balance as $800, which is something I wanted, to be able to keep it above that normal rate we were at. So keep that in mind. You'll thank me later. But now the future's already down 1%. Watch the Asian and European stocks and currency. Again, now watch how other currencies get involved with this and how they value. But that's what we're going to be watching tonight. We're going to be watching throughout tomorrow, even up until the European close around 8:30 Pacific, 11:30 a.m. Eastern time. And the thing with China's currency, the more it devalues in a short time, the worse it's going to be. It's already at a historic low. It's weird if they keep letting it go from here day after day. Usually they will make a big weakening, then they'll come and support it, and it'll kind of hold for a few days and then continue on. But if it does start weakening day after day after day, and it keeps this pace, and we're not seeing a sign of support and more escalation and retaliation, that is going to pretty much indicate what's going on really bad. And watch even China stocks and what happens there. And even now, even after hours too, the bond rates are at the lowest level since before Trump, like I said earlier. But what you want to watch here is the response of the market with these new low yields. At what point does the market start to follow? And it is following. Like, if you guys even remember, I brought that up here before a while ago. When you start to even see, you get it's kind of the inverse here. But I wish I could even just show you guys. Okay, so here's the 10-year bond. And again, I've showed you guys this before. You could kind of see that's from like 2016 there. So let's pull up a longer term chart. So you can see there's 2016, 17, 18, and literally since the election of Trump, you could see the bond rates are following with the market. The bond rates go up, the market goes up. Then in January, February, bonds going down with the market, and it pretty much starts to follow. And then at 1.2, it starts to diverge here. Then there's October, November, and then it drops. But now the difference was since October, November, December, the bond rate started collapsing still, and that trend has broke. So now it's watching how far does the market catch up with the bonds. If the bonds keep going lower, when does it start to converge? So that's, again, why TLT is an important play, but I'd watch all that. And again, there's a lot of macro stuff and other factors beyond just the companies now, which is even going to come into the plays we're looking at. So watch all that, and the important thing we're going to watch, we'll put this up, we're going to be streaming tonight, is watch where China fixes their currency. And it's now, where do they give support to the currency? They set it's a managed float. They set a range that they're going to support it in through that day. But then you could kind of just, wherever they fix it at, if they allow it to be lower, if they fix it even at 7 and not at 6.9, that is going to pretty much confirm that currency manipulator thing. And we're going to see, and oh man, that'll be fun. But lastly, the imagination is a powerful thing, my friends. Don't forget, you guys have another week and then another one. We're saying this for FOMO. You guys are seeing the plays. Even then, I was even saying I sold out puts already. I even got a few calls, but I grabbed Baidu's. I sold those out. Those are going to be up more. Those Walmarts, I want to watch that right there. I sold out of those 105s. I could have made an extra $100 right there on a small account. That's 10% and this and that. There's going to be more opportunities, and that's what the best part is. These events, it's not as if it's just going to happen once here. There's going to be opportunities across the board, and there's another week after this, and another one, and another one. Your imagination was very powerful when you're holding a play, when you're making plays, and you're like, oh, I'm already up, I'm going to win, I'm going to do this, it's going to be this, I'm down, or oh, it's never going to happen, it's going to be the big one. Then some random guy doesn't even speak English and never traded his stock in his life comes into the chat saying everything's going to die, sell off, and you're like, oh my gosh, everything's going to die. If I don't get a put right now, I'm not going to make money. What do I do? What do I do? I need help. Josh, is it too late to buy the TLTs? They're up 4,000%. Do you think it's a good time to buy? Should we still buy it? Just chill, man. Chill, okay? Just woosah. Rub your ears a little bit. Go woosah. Easy, man, okay? You got another week. Don't forget you have another week. And then you have another one after that. Then another one after that. Then another one after that. And then another one after that. And then another one after that. and then another one after that, and then another one after that, and another one after that, and then you still have another one after that, and then another one after that. So you could keep going because you still have another one after that. So hopefully this is annoying enough to make you just not forget this and be smart and chill and let the opportunities come to you. It's exciting. Enjoy the process, and I love it. So let's talk about the plays now. So right off the bat, I like Walmart. That's a good one. The one, I got these McDonald's. We're going to see how these play out. And again, I want to see what levels, and the key is going to be watching the value stock. So why did I grab McDonald's this morning? And this is going to be the key. If you want to find plays, find the ones that are not pacing with the market. The market was down 2%. McDonald's was down about 0.5% or something this morning. It was good. Amazon too. And tech is the biggest loser. And really, whatever was the biggest loser today could be the biggest gainer tomorrow and vice versa. But the object is find the stuff that isn't lagging as much. And you got to get it cheap, and hopefully it could get big dollar amounts. And that's what I'm going for with some of these. But the value stocks, low volatility, especially if it's a value stock with a higher price point, you could do a lot of damage. I like the Walmart. We sold out of them. I didn't roll over. I want to see. We'll see where they open up and how they do. But if not, I'm going to keep my eyes on those. FedEx was down big. Transports could lead the way. They're going to even be linked to oil. I'm going to watch that one as well, too. And then the rest are going to be Boeing is my favorite. Out of all the weeklies, that's the one I ended up keeping. And we did another Boeing spread for September on the put side. Again, I made that Robinhood video on the spreads, and we did a few today. And then we did a Facebook one. But I also grabbed a September 265 255, 240 put. It was $40, and now that's really, really far out there. But again, after this level of 300, it does start to get really, really low. The thing is, I have September, so I want to see how it is. And the best part with these spreads, like we saw with the UVXY one, even though I'm still far out the money on this play, you could still gain profit on this spread because, again, the difference between the two strike prices that you're buying. So again, something if the volatility goes crazy, that's why I like the Boeings. And it's a slower mover. That's why I want time, but I need to do the same thing on the bounce. I also played the Facebook. I think it was like the 185s or 165s. Yeah, 165, 155, and that's pretty low. But again, after Facebook gets, as you guys see at this level, once it breaks below that 180, it could really plummet, and it's already down here at 176. So that's why I got it around these levels. That's what we talked about yesterday. So it's breaking those key supports. It's now setting a level even around here. That 160 range isn't too unrealistic. So this one paid $40. If it does drop, I mean, it's still $1,000 max reward. So we'll see. And I should have played that, honestly, instead of Amazon. I think that's a way, way better spread than that Amazon I bought because Amazon could definitely move that much, but for $245, I probably should have spent $200 on these, and it would have been a lot better. But watch Facebook and then Amazon. We did the spread. I want to see if it does keep going lower. I'm still going to try to find a put, but they're so expensive. But the thing I like about Amazon is it's a fast mover, so you could get some of these spreads. You're going to spend a little bit more money, and you're not going to make as much on the back end. However, it could hit those very, very easily and quickly, and that's the point. That's what's kind of fueled my greed on the call there, is I was going for more speed than trying to take something with just the best risk reward. I got the Apple calls, and I like that too. I'm still short on those other calls, but I like where it's at. If anything, like I said, they could be the first to get hit by more retaliation, but then they could also bounce and be a big leader. And after their earnings, this is a pretty big sell-off. So we're going to see what happens there, and I like those. Next is the TLT. Everybody kept asking me, is it too late to get in, or is it? And I keep saying yes. Everybody's, these are the same plays right here. They closed at $2. I sold one of them today for $150. I'm holding one left. We bought these for $4 to $200. But now everyone's saying, is it too late to get in? And I said, dude, you guys are crazy. So what I did, I said August 16th, I sold a 141 call. I sold the premium on this because as it gets higher, TLT, it could still break out. And if it does go even crazier, I still have those 25 September ones. But even on this play, I was up so much on the 138. I've already taken $200 the day before. We took another 150 before, and then the $20 to pay for it on the first sell. I've sold out four different times or three different times to keep this one last one. And now what I did, I figured they were really expensive, and this is the play I'm making. I'm waiting for TLT to come down. And again, these are the shorter terms, but I'm gonna wait till even the Septembers, and I'm gonna buy back into it when it's a more appropriate price. So what I said, hey, I'll sell this. I sold this for $60. Even if I lose on this, if TLT shoots up to 141, it's gonna allow me to hold this contract, and I'll guaranteed make $300 on it. But TLT is already at 140 after hours. But again, so it's going to give me another $1. After that, though, I could sell it. I could even keep holding it if I want, or turn it to another spread. So you guys will see what we'll do with that. That'll be pretty fun. But that's what I did on it. And again, I'm cool with missing on some of these plays. Like, yeah, but do you see how I'm doing it? I would rather make this play. If I'm wrong about TLT being too expensive, I make $300. I'd rather do that than spend $40 into somewhere, $100 somewhere, where it's just saying after a few days or after one single day or a good 1 hour stretch of the market getting crazy news or anything, you're going to lose out and then be frustrated over it. Just let it come to you. You want to take it. You will be able to find cheap plays and you will be able to take advantage. It's all going to be what you're focusing on. So watch that. Gold GLD was very expensive. I'm going to keep watching these and see how they play. But again, as it keeps going up, the key is to notice when does the IV go crazy like it did with TLT. But if that doesn't happen, it's going to be hard. But I'm going to be watching that. Then watch the UVXY. If anything, I think the UVXY is cheaper than not. Oh, crap. It hit 43. Oh, baby. Those spreads are going to be in the money. So then that could be pretty wild tomorrow. We'll see. But even then, the UVXY, and I think that's why it did shoot up so much here, it was really suppressed throughout the day. I think it should have went up a lot more, even though the VIX was up 40% almost. This UVXY did not move as much, so I was waiting for this and going to see how this plays out. But we have a few different plays on. There already. And again, how it reacts, it could be decent, but it is up a lot too. And this is the play I made on it too. I had a broken spread on it. So, and what I mean by that is that this was my intention months ago. I don't know if anybody remembers this. I bought these 10 calls for $600, these September 85, and I said I was going to turn it into a spread. I didn't want to just buy this far out of the money for $600, but then I waited too long, and I said I was going to buy this one and wait to get a better price to sell. And make it it was still going to be a debit spread, but I wanted to try to maximize my money. So I call it a broken spread by making one order first, and that's the risk I took because when the UVXY went down, I was down like 40-50% on this. But now it came up today, and it came up a lot. So what I ended up doing, you could see I had 10 of these, and I bought them for 60 cents. So I bought them at $6 a pop, or 60 cents a pop. But now these went up, and I was able to sell out of these today. It says 52 on the bid, but as you see here, I got $650. So literally now, by doing that and taking advantage of the volatility, and this is something I might start doing here, where I might start even buying spreads, and then once there's a bounce, profit off of the put and the premium sell and close out of the spread early so that I'll still be holding the long side of it, because even if it goes down, if you have enough time, they could still come down here. So I'm going to play around with UVXY. The issue is the spreads, but as you see here, I got $650. I spent $600 for here, but now I have 1085 calls, and then I sold the 90 calls. So even if these expire worthless, I'm walking away with $50 profit. And then if the stock shoots up, if UVXY 95 is pretty crazy, but hey, who knows? Let's say it did go to 90, or excuse me, 85 to 90. I would be making $1,500 per contract times 10. That'd be $5,000. So I got paid $50 to make that play. And that's how we got to take advantage of even selling the premium and again, taking advantage of what the volatility is doing. So watch that. And lastly, watch Drip. Again, oil did its thing. In TLT, we already discussed. I'm going to wait till these come down here. But with Drip, watch oil. I think these are pretty unplayable. But if oil makes crazy moves, we could see what we could get our hands on. So watch that. And lastly now, these are what we talked about yesterday. Watch for the stuff that is showing immunity for the most part, or really not getting affected by this stuff. And a lot of times it's healthcare. Here's ALLK. This went crazy today. There wasn't really options, but after a big move like this, the market makers are going to create options, so you're going to get different spreads. I'm going to watch this at the morning, but take a look at MyGen. Remember, this was that $40 to $1,500 or $1,100 we made. It's still holding up. These are biotech companies. They're very separate, and you could even see Roku today. It didn't do as bad. Literally only down 1.3%. They're coming into earnings, so that's a good sign, even though Disney dropped a little bit more. And then Beyond, surprisingly, didn't really do anything as well, too. There's plays that are being insulated from this stuff, and those are the ones we also want to look at. And then again, like we said in the morning and even the beginning, if you want to get these smaller put plays, find the stuff that is lagging behind or hasn't made as big as a move yet, because the markets are going, this is volatility. Things are going to be lagging, leading, pushing, and pulling all the way around, but that's it, ladies and gentlemen. I'm going to see you tonight. You better post your watch list. You better get your head in the game and be calm, and that's it. No FOMO. Just be smart with it. Let's go!